Hello. Hello. Can everyone hear me? Hello. Okay. Just 3 more minutes before we start. For those that have joined us, remember to help us to like this video and share it to your friends. Yeah, because we are going to share something interesting about gold and silver tonight. Yeah. Yeah. Okay. So it's about 8 o'clock. Just 1 more minute before we start. Okay. For those that are in, please help us to share this video and give us a like so more people can actually see us. Yeah. Mm. Okay, it's 8 o'clock. Okay, so thank you everyone for your time joining us tonight. Okay, so before I start, just a very quick introduction about myself. So my name is William and I am with Philip Futures as a marketing and dealer staff. So and my major interest is mainly in commodities as well as on technical analysis. Okay, so I like to understand the price movement of a product through technical analysis instead of fundamental. Not saying that fundamental is not important, but yeah, price and its movement is going to tell us everything about the commodities in itself in the futures. Okay, so yeah, this is my main interest. So before I start, just a very quick disclaimer. whatever that I share tonight is going to be a knowledge sharing purpose, and it doesn't really constitute any investment advice. Okay, so what we are going to share tonight will be whether is gold going to be shinier or is silver going to be shinier. Which products do you think is going to outrun better in this market sentiment? Okay, so yeah, how many of us? There is 20-ish of us already. So for those that just joined us, please help us to like this video and also help us to share this video as well. Yeah, just share and we will get more people to join us. Yeah, okay. And also, are you guys able to hear me before I start? If yes, please help me to just let me know by typing yes in the comment box before we start, just to make sure that everyone can hear us. Yes? No? Yes. Okay. Great. Great. So okay. Since the voice is clear, let us start our sharing tonight. Okay. And also, just before I start, also, if you have any questions, you can type in the comment box, and I will try to answer it when I can. Okay. Or if you have any questions about gold and silver, feel free to ask me as well. And if you are shy, you can try to private message us via our website, our Facebook page. We have a private message. We will try to answer you. So yes, before and this, okay. Now, what I'm going to share tonight will be a beginner's guide to trade gold and silver futures. And this will be the main topics that I will discuss. Now, how many of you here actually trade gold and silver at the moment? Is there any of us trading these products at the moment? Yes. Yes? Okay, great. Okay. Now, before I move into the technical, just a very quick run through on the usage of gold and silver. Okay, so this product has been very widely used by a lot of people during the economic crisis. Now, if you look at this, central bank reserve. First thing first, what does the central bank do when there is an economic uncertainty? What do? They will try to stock up the gold. Okay, why? For there are three main reasons. The first one will be for safety purpose. So this is to protect the currency purchasing power of a country. Okay, especially in the US, we know that when US try to print more and more money through the quantitative easing, when they try to print more and more money, the value of the US dollar is going to decrease. So in this manner, the central bank needs to preserve the gold in order for them to maintain the value of the currency, or else they need to make sure that the US economy is going to do really well for them to maintain the value of the US dollar. Okay, this is for safety purpose. Next will be for the liquidity purpose. Okay, gold is a very highly liquid product that it can be easily converted to cash without really losing its value. We as a consumer, we actually can feel it as well. So when we try to go and buy jewelry and stuff, if we buy gold jewelry, we can easily bring it back to the gold seller, and they will take it by not losing much of the value compared to other jewelries like silver, etc., etc. So gold is a highly liquid product that can be easily converted to cash. Lastly will be the return that gold can give us. Okay, gold is very good. It's a very good inflation hedging products. Okay, which is why during the economic uncertainty, okay, which is in, I think it all started back in 2019 June. Okay, it all started back in 2019 June when there is a trade war and stuff. Market is uncertain whether how is everything going. No one knows. There's a question mark. Hence, the gold is going to move. Okay, of the inflation hedging, economic uncertainty. This is the fundamental of gold. And lastly will be electronic device, but this is not so widely used. But yes, gold is a very good electricity conductivity, and because of the mechanism of it, it doesn't erode that easily. It's like it's really hard for gold to erode, which makes it a very good electronic device conductor, okay, and jewelry. So this is the demand. And now, what are gold mainly used to? If you look at this pie chart here, 54% of the gold are actually used in jewelry. Okay, so more than half of it. Next will be the coins and bar. So coins and bar is also part of investment. Jewelry is part of investment also. And next will be the net official settle. This belongs to the the central banks of the world, etc., etc. For every country, they will try to stock up gold as their reserve. Okay, so 14% of gold are actually stocked up by the central banks around the world. And if you look at the industrial fabrication, it's only 9%. It's not a lot. It's less than 10% of gold is only used in the industrial. So from here, we can see that during economic uncertainty, this group of people and this group of people, they will tend to go bar. The central bank is going to stock up the gold during the economic uncertainty. So these two group of people, they will try to increase their holdings on the gold. So from here, we can see that during the economic uncertainty, the demand will go up. Okay. Now let's look at the demand of silver. Silver, on the other hand, if you look at it, the pie chart, what is the major usage of silver? Sorry, my screen is a bit, yeah, okay. So what is the major usage of silver? You see, 58% of silver are actually used in the industrial, which means industrial meaning that it's used in like solar panel, used in medical equipment, used in cars, etc., etc. A lot. As long as electronic device, we will use it. Okay, so more than half of it are used in industrial, and for investment, which is mainly in the silver bar and also on silverware, it's only like 20%. It's only somewhere 20-ish, but mainly here, industrial. So from what I share on the demand of gold and silver, we can have one conclusion here. Gold, we use it during, the demand comes in during the economic uncertainty, but silver, the demand comes in during the recovery cycle of our economy. Okay, so from here, we always look at demand and supply. Commodities is a very straightforward product where we just look at the demand and supply. We will know when is this commodity going to move. So silver is mainly used in industrial, which is the economic recovery process. Then the demand will only chip in, which is why you will see that gold move in 2019 June, because that is the uncertainty period, and now we are slowly moving into a recovery process right now. The peak of COVID is kind of reached a peak. Okay, the COVID has reached a peak, and we are slowly moving into a recovery from the vaccine coming out, etc., etc. Is obviously that the economy is reopening of every country. So the demand of silver, to me, is going to chip in starting right now. So the demand of silver is going to slowly go up from now on compared to gold. So let's look at some historical data for gold. Let's look at some historical data. Sorry, I think your screen is not there yet. Okay, let's look at some historical data on gold. So if you look at this table, you can see that in 2008, this is during the economic crisis in 2008-2009. Okay, this is the global financial crisis. So in 2008, you can see that starting the global financial crisis, if not mistaken, should be the end of 2008. So the demand should comes in starting 2009. You see, 2009, 2010, 2011, the demand on gold actually goes up. Because remember, during the economic crisis, the demand of gold comes in. But if you look at silver, the demand of silver also at the same time go up. Now, from these two charts, you probably can't see how much demand actually comes in certain period. But later on, when we move on to a later stage, we are going to look at the price of the silver. Price is the most direct way for us to see the demand. The higher the price go, which means the higher the demand. Okay, we'll just look at the price action of both gold and silver in 2008, 2009. You can very clearly see the demand of silver compared to gold during the recovery process. Okay, so just one more thing that I would like to add on here on the demand of silver. Silver, just now we talked about, silver is a very good electricity, is a very good conductor for electricity, okay? And if we all know that electric vehicle, okay, like the Elon Musk, the hybrid cars, etc., etc., this refer to the electrical vehicle. This is the hybrid electrical vehicle, and this ICE belongs to the diesel powered vehicle. So this is the cars that we see mostly on the road right now. If you look at this diagram by Reuters, okay, this is a survey on demand that did by Reuters. You can see that the demand on silver in the automotive industry is going to be really going up starting 2020. As you can see, the growth on the silver is going to go up so steep, you see? Okay, and mainly powered by the electric car and the hybrid vehicles, which is like the Tesla, which is why you can see Tesla, the green energy. The greener the energy, or the greener the technology, the more or the higher the demand of silver, because silver acts as a very good electricity conductivity. So it really, the demand just comes in when our economy or when our environment just move towards the green energy, green technology, the demand will just increase. So yeah, so this is the demand. Now, after we look at the demand of silver and gold, how do we know that which product is better for us to invest? Gold or silver? Which product is actually better for us to invest? After we look at these two. By the way, for the newcomers that just joined us, we just went through the demand of gold and silver. Okay, these are just the very basic fundamental for us to at least understand some background about gold and silver. So yeah, okay, so now this will be the ratio that I will be using to analyze whether I will be investing in gold or I will be investing in silver to have a better return, to maximize my return of investment. Okay, so yeah, gold to silver ratio will be the ratio that I will be using. Now, if we look at this chart, okay, if we look at this chart, you can see that this is a gold to silver ratio chart. If you look at this chart, you see when gold to silver ratio is higher than 80, gold is more expensive than silver. Why? Because you will need 80 ounces of gold, 80 ounces of silver in order to buy or in order to exchange for 1 ounces of gold. So when you need 80 ounces to buy one lot of, to exchange 1 ounces of gold, gold is damn expensive. It's really very expensive, you see? This is the ratio, as you can see. It's not over, this is from like 1976 until 2020. If you look at over the 30, 40 years, it's very rare for gold to actually, the gold to silver ratio to actually shoot up to this area. 1990s, it went above 80. 1993, it kind of touched 80. In what years is this? 2005, 2003, it touched 80. And the reason too will be in 2009, okay, it touched 80. Here it touched 80, and this is the most ridiculous one, which is caused by the COVID, and it actually went above almost close to 120, which means you need 120 ounces of silver in order to buy 1 ounces of gold. This is like historically expensive on gold, okay? So yeah, as long as we see the gold to silver ratio is above this 80 rate, it's better that we invest in silver for a better return, because gold is very, very overpriced. Now, what about when gold to silver ratio is below 50? It means you only need 50 ounce of gold in order for you to buy 1 ounce of silver. Of silver, 50 ounce of gold or silver to buy 1 ounce of gold. So we buy gold because silver is actually more expensive. If you look at this, you see, so it will actually reverse. When it went below 50, it will actually go back up. So this is the neutral part between gold and silver. So in between this, I would say it's quite fairly, gold is not too expensive and silver is probably not too expensive. So in between this. But when it's above this or below this, it gives us a very clear direction which precious metal that we should invest. Now, let's look at the chart. Okay, let's look at the chart. This is also a gold to silver ratio chart. So in 2004, in 2003, the gold to silver ratio reached as high as 80. You see, as high as 80. So when the ratio reversed downward, over the next 3 years, you can see that gold actually increased by 79%. From here reverse to here, the price of gold increased by about 80%, but silver on the other hand increased by over 200%. Okay, so this clearly gives you a good idea. And next will be in 2009, when gold to silver ratio reached 80.1, moment it reversed. This is during the economic crisis. Silver price went up by almost 400%, but gold price only go up by 70%. Why? This is another reason if you look at this very clearly. Remember that I shared earlier, gold price increase, the demands only comes in during the crisis, the peak of crisis or before the crisis. But after the crisis, the demand of silver will actually come in. So that really explains why the silver price went up so steep or so strong during the recovery. You see, these are all recovery, and the silver prices just really shoot up. Okay, so in 2016, again, the ratio reached 80. Moment it reversed, gold only go up by 3%, but silver actually went up by 14%. You see the return is always 2 to 3 times when the ratio is that high. Now, what about this? This is the most recent one. This is the most recent one. In 2019, this is 2019, okay? Silver has been a lagger. We has been seeing gold price keep going up, but silver is still sleeping. It's the lagger, which caused the ratio go up to as high as 112. Now, moment this retrace, the ratio retrace, do you guys know how many percent does gold price is still going up? Don't get me wrong. Invest in gold is still a very, very good, it still gives you a very good return, to be honest. But the return is not going to be as good as silver, because it's obviously telling you that gold is overpriced. Okay, so moment it reversed, gold price went up from 1,006 to 2,090. That is about 30%. But silver actually went up from 14.9 to 30 bucks, the peak, which is about 100%. Yeah. So this actually very clearly explains to us which product is going to give you a higher return. And as at today that I'm speaking to you right now, actually the silver is still standing at 73, 74, 72 to 74. It's buffering somewhere there. Now, you might say that, okay, now this is below the 80 benchmark. Is it still overpriced? Okay, is it still overpriced? If you ask me, I would say it's not like super expensive, but it's still on the high side. Okay, because remember, our lower benchmark is at 50. 50 is somewhere here. You see, it's still so far away from being for gold to be a cheap product. You see, so if you ask me, gold is still fairly expensive. Okay, it's still on the high side if you look at the chart. Now, this will be a very good ratio. Like I said, this will be a very good ratio for us. Now, let's look at the performance of gold and silver after the quantitative easing. For those that do not know what is quantitative easing is the central bank that will try to print more and more money, okay, print more money to inject into the market to increase the liquidity, which is what the US Federal Reserve has been doing in April. They have been coming out with these rules of unlimited QE to stimulate the market, okay. So this is a way that the central bank or the government do to save the economy, to make sure that all the companies or all the people in the country have enough money to use, okay, prevent them from going bankrupt. Now, when a country is doing this kind of stimulus activity, how will gold and silver perform? Because remember that we discussed really early, when a government tries to do QE, what is going to happen? It's going to inflate. You see, the value of US dollar is going to inflate, because suppose there is only $1 in the market. Now the government just throw one more dollar into the market with no reason. Now how to make sure that these $2 is going to have equal value? The economic, like I said, the economic needs to go up to do really well to justify this $1 that the government just throw out from thin air. Okay, so yeah, so in this sense, gold and silver is a limited resources, and let's see how they perform during this QE. Now, this is the start of QE. Okay, this is the start of QE, which is the end of 2008. So when after the QE, you can see gold started to go up really steep and on a very good uptrend. You see, over the 3 years of 155% to a peak. You see, very nice uptrend. You can see there is no slowing down. Now let's look at silver. Let's look at silver. Okay, let's look at silver. If you look at silver, this is the start of QE, which is in 2008. This is the start of QE. You see, silver doesn't go up as nice of an uptrend like gold. Okay, sorry. I think the slides is slightly delayed. Are you guys still looking at the silver slide? Okay, silver. Okay, great. Okay, if you look at these silver slides, you can see that silver price do not go up as in such a nice uptrend like gold price, but it goes up. It does goes up because somehow it is still a precious metal. It is still a safe haven product in some sense. Okay, and remember we discussed that the demands only comes in during the recovery process. So this will be the recovery process from 2010 to 2011. So from here to here, this will be the real recovery process, which the demand of silver actually comes in. Okay, so from 2009 QE until 2011, same period like gold, the price of silver actually went up by 400%. I'm not saying that this economic crisis, the silver price is going to go up by another 400%. No, I'm not saying that. It's just to tell you that you get the idea that in what economic cycle, which precious metal should we invest to really increase our return? You know, we both invest $1. We want to get the most out of it. They are both precious metal. But silver is a very underrated, I would say underrated precious metal for people to invest. We just keep hearing people invest in gold, invest in gold, invest in gold. But we really hear people say invest in silver. So now I'm telling you that from the historical data, we as an investor, we should be smarter a bit to know what precious metal to invest in what economic cycle. Now, let's look at some correlations between US dollar. We have been talking about US dollar and also on the price of gold. Now, remember, gold price, what are the currency we use to trade gold? What are the currency? Of course, it's US dollar. So when US dollar is cheap, when US dollar is cheap, gold price will usually go up. Why? Why is this happening? Because gold will be cheaper for foreigners to buy. Imagine if you are earning ringgit Malaysia and you want to buy gold. And gold is traded in US dollar. When US dollar is cheaper, when our rate versus US dollar is cheaper, does it make it cheaper for us to buy gold? Yes, it does. So when it is cheaper for you to buy gold, of course, you will buy more. Because suppose for $1,000, for 1,000 ringgit, you can buy this much, okay? Let's say 2 grams. But today, US dollar price, the value of US dollar dropped. So for that 1,000, you may buy 3 grams. So you will actually buy 3 grams because with the same amount of money. Hence, demands go up. You see? So this is the demand and supply between US dollar and gold. So try to understand the demand, but of course these are just a concept. But this later on I will show you a very good index. We call it the US dollar index. It can be a very good benchmark for not just for gold and silver, but also on crude oil, on all the commodities that is traded in US dollar. It's a very good benchmark. I will show you in a while. So before I show you the chart and stuff, just some fun facts on gold and US dollar, which we have kind of covered just now. First will be gold and silver, gold and US dollar. They are both considered as a safe haven asset. Second, gold are traded in US dollar. And third, gold and US dollar have an inverse relationship. Okay. And the fourth will be US dollar, like I mentioned, is backed up by the US economy. So how do we determine whether US economy is good or bad? From the PMI, etc., from the jobs unemployment report, from the consumer confidence index, etc. There are so many indexes in the US, in the States, that are used to judge the economy of the US. Okay, you can just go to investing.com and try to search for it. It actually lists it all down. And lastly, gold are used as a hedging product against currency devaluation by mainly investors and central bank. So instead of just invest in stocks, invest in properties and stuff, actually precious metal is also another product that investors should really look into it, because it helps us to kind of like mitigate the risk of the economy, you see. Now, okay, so that is the part on the demand of silver, okay, and gold, the demand part. Now, let's look at some technical analysis. Any questions about, if you have any questions, feel free to just type in the comment box, yeah. And yeah, if I see the questions, I'll try to reply. Okay. So any questions, just type in the comment box. I'll try my best to reply. Okay. Now let's move on to our chart. Okay. Okay. Can you guys see the chart yet? Not yet. Slightly delayed. Okay. Sorry, slightly delayed. I'm just waiting for the. Okay, so this is the US dollar index. This is the US dollar index. If you look at the US dollar index, when gold shoot up from July 2017, when gold shoot up, the US dollar actually decreased, the value of US dollar actually decreased dramatically. You see, it took a jump, which caused the gold and silver to go up so much as well, because it is actually cheaper. Now, if you look at this one, this is a daily chart on US dollar index. This is the chart that we can closely monitor to identify the movement of gold, silver, crude oil, and all the commodities that is traded in US dollar. Now, if you look at this chart, let's look at some example. Just let me quickly show you some example to prove that actually US dollar, it does follow the gold. If you look at this one, on the 12th of August, US index is at about 93.6. Okay, it's at high. Okay, on 12 it starts to drop. Let's look at what happened to silver price or gold price. Let's look at gold price. Okay. Oh, sorry, that is crude oil. Okay, let's look at what happened to gold to silver on the 12th of August. You see, 12th of August. Remember, 12th of August, the US dollar index went down. So gold price went up. You see, this is the inverse relationship that we were talking about earlier. This is the inverse relationship. It's a bit delayed. Sorry. Okay. Okay, so this is the inverse relationship. So the US dollar will be a product that we can closely monitor at the same time. Now, so I will just move on to the technical part on silver. But before I start, just let me do a very quick, okay, let's move on here. Before I start, just let me do a very quick. Okay, before I start the technical analysis part, just let me do a very quick explanation on the concept that I will be explaining later on. So when we want to do a long position, which is a buy, okay? What we need to make sure, we want to long at a price that is the rock bottom, okay? We want to long at a price that is at a rock bottom, okay? Now, what about short? Just some. So when we want to long, we definitely want to long at a price that is at the rock bottom, which means you think that price won't drop anymore. Only then we long. What about short? When we want to short at a price that we reckon that is the peak already. It is not going to go up. Only then we short. Now, how do we determine that price is not going to go up or the price is not going to continue to fall anymore? You need multiple testing. In order for you to achieve this the rock bottom price, you need multiple testing. Okay, so if you look at this, multiple testing, so usually it will move in this manner. So what is multiple testing? So the sellers, they will try to push it downward, and immediately we can see buyers push the price back up. So this we will call testing. You see, so market, the buyer and seller, the sellers especially, when they want to short aggressively, they would try to do a bit of testing first to see whether the buyers are willing to hold the price or not. So this we call testing. Without testing, we won't know that this is a rock bottom price. Okay, it definitely you need to. It's not because, oh, you see this is a support, so this will be the rock bottom price. No, it's not going to work that way. You need to do testing. So this will be a testing. What about for short? It's the same story. So in order for the price to go down, you need testing. So the buyers will try to buy slightly higher, push the price up. Immediately, the seller will push it back down. So this we call what? Fat breakout. A lot of people, they try to chase moment the candlestick went up, you chase in, but you got trapped. Immediately you come down. So this we call fat breakout. So you need to do testing in order for you to confirm that this is actually a peak. Okay, you need to do testing. It's just like you don't do testing, you will never know whether this is a peak. You don't do testing, you will never know this is the rock bottom. Okay, so this is the concept that I'm going to use to explain later on my gold and silver. Okay, now let's move on to, before I move into details into smaller time frame, let's just look at some bigger time frame. So usually when commodities or whatever products that they break out from a multi-years consolidation. If you look at silver, how many years it has been moving in consolidation? Since 2013. From 2013 until 2020, 7 years consolidation. Usually this kind of breakout, don't be too afraid to chase it. Okay, don't be too afraid to chase it, because this kind of consolidation usually will and breakout will usually be super extremely strong. So you just, but not asking you to chase high, but yeah, you find some good entry along the way with the concept that I have been explaining just now. Remember, let's zoom in to have a look. I'm just using 4 hours chart right now. Okay, it's easier for us to see without too much candlestick. Now, if you look at this one, or if you want to see it clearly, let's look at 1 hour chart. It's going to be quite clear with 1 hour chart. Usually for daily chart, it's only for me to look at the direction of the commodities. But yeah, okay, it's a bit slow. Okay, now remember, what did I say just now? Remember, when we want to long, okay, just wait. Okay. By the way, any questions? Oh, okay, sorry. Correlation part. Okay, I will answer the question. I will answer any question. Just type in the comment box. I will try to answer most of it after I explain my technical part. Okay. Now, remember what I shared just now. In order for us to identify the rock bottom price, okay, you need to do testing. You see, if you look at this, when the silver price is only at 22 bahts, you see, so over here it's very hard for us to identify a best entry. Very hard, because the price is too volatile. But when the price slowly slows down, you can very clearly see that it has identified a floor, a price that the buyers really want to support. If you look at this one, this is the price that the buyers really want to support. You see, sellers will start to do testing. Seller push it down, the buyers immediately push it up. So we know that this is the price that the sellers is going to do testing, and it's also the price that the buyers are not willing for it to break. With this, we can establish a very good stop loss. So this price point will be the price point for us to identify a stop loss. Okay, you see, again, it starts to do testing. You see, after a few testing, you can very obviously see that the buyers are now stronger, which is the change of energy. You see, now the support and resistance, we always learn about support and resistance. So the resistance has now turned into support. And these 2 points will be a very good foundation for us to set our stop loss, because this is the price that the sellers is doing testing and the buyers is willing to protect. Hence, the price go up, you see. So even nobody can very accurately predict the market. So we do not need to predict the market. We just need to identify a good entry point with a good stop loss. That is our job. Our job is not to predict that the market is going to go up or the market is going to go down. Although the chart is telling you it's going to go up, but anytime it can go down too. So we just need to really very clearly identify what are the price point that the buyers want to support. Okay, these are the two price points. So that will be our cut loss. Okay, so this is first case in what day? 24th of July. First case. Let's look at the next one. It's the same. Chart pattern just happens over and over again. It just happens over and over again without fail. So you just need to really identify what kind of pattern do you see here. This is on 31st of July. By the way, for those that join us late, like our page and also help us to share. And yeah, any questions, type in the comment box. So if you look at this one, you can see that, yeah, this is a cup and handle. Yes, no. Yes, it does look like it. Okay, it does look like it. But what are the price point that, even if you look at here, you can very clearly see that these are the two price points you see here. Okay, but the area of movement is quite big, so it's very hard for me to identify. But at the later stage here, you can see very, you see, the volatility gets smaller and smaller, which buyers, again, seller do testing, the buyers immediately push out. The buyers doesn't allow the price to go below it anymore. So for here, this is the first testing that we see. So this is the first area that we can establish ourselves saying that this is the price point that the buyers want to protect. Again, you see, comes down, immediately got pushed back up in the next two candles. So these are the very good area. This line here is a very good area for us to initiate a long position. The moment it breaks this low and it doesn't got pushed back up, just cut loss. Or if you set a cut loss right below it first, okay, even if you got cut, you can always re-enter it. You can always feel free to just re-enter. Don't be too afraid to re-enter, because for me, I would rather get washed out, get stopped out, rather than a mistake. What if this happens and it doesn't bounce back up? What are you going to do with your money? Your money will just got buried, burned to zero. So we never try to predict the market. Rule number one, never try to predict the market, but try to identify what are the price point that the buyers want to support. Okay, so again, you found a very good entry price right here for it to go up. Okay, now let's look at the most recent one. Let's look at the most recent one. This is 10th of August, which is just 2 weeks ago. We can see that, you see here, okay? So these are the two testing points, you see? Move in sideways, push back down, because this is hourly chart, by the way. So as long as the next 2-3 candle, it will start pushing back up. To me, is a good looking point. So moment it got pushed back up, we can establish ourselves saying that this is the two price point that the buyers want to support. So moment these two price point is no longer supporting, do not try to hold your long position anymore. Don't try to go against the market, because it's obviously telling you that the seller is stronger. You see, price drop, but you see, next 1, 2, 3, it just doesn't push back up anymore. You see this one, 1, 2, 3, 3, 4, 5, it does push back up. You see, this candle will start dropping. So don't try to go against the market by doing a long position here. Because of what? Because you do not see a very obvious support or a very obvious price point that the buyers want to support the price. Hence, the price drop. So even for here, you can see you want to draw here. You want to draw it here and say, okay, this is the price point that the buyers want to support, and these two are the testing price. Yes, you may do that. This is a very good entry price for you to initiate a long position. No doubt, this is a very good. But like I said, we never try to predict the market. Yes, the trend is telling you that it is going to go up, but things can go wrong too, because you are not the person who manipulate the market. So of course we will never accurately predict the market, but what we can do here is to identify our stop loss. So if you think these are the two price points that the buyers want to support, moment it doesn't hold, it breaks down, you see how many candles here, it just doesn't push back up here anymore. So never try to hold your long position anymore. The most here, I would cut my position already, even if I enter here. You see, this is 20, yeah, this is the most you can hold your position, because it's obviously telling you, but by right, you should set a stop just slightly here lah, okay? So this is the most. If you are still holding it, to me, it's your own fault, okay? You are trying to bet, just bet like big or small, because it's obviously telling you the buyers has no intention to protect it. Remember, rule number one just now, when we try to do a long position here, because we know that this is a rock bottom price. Remember, this is a rock bottom price. Okay, it's very far for me to scroll back. So yeah, I don't scroll back anymore. So this is the testing that we are talking about. So moment if that price point don't hold anymore, don't hold your long position anymore. Same goes to short. It's just because currently the silver trend is going up. So I will just be explaining using an uptrend. Now, so silver price actually plunged bam, 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 on the 12th of August. Now, let's see what happens here. This is the most recent one. Okay, this is the most recent one. Do you go, although the big trend is going up, no doubt, the on daily chart, the uptrend structure is still there, still holding really well. Should you do short? Yes, you can do short, but for me, usually I ride the trend. So if the big trend is on uptrend, I would prefer to find a long entry. I prefer to find a long entry. Now, if you look at this one, by the way, I think I forgot to mention. So this length from here to here, this is just, it can be a way for us to predict how strong can the candlestick go up, how strong can the price go up. Of course, like I said, we can never predict the market. So if you have already have profit in your pocket, always try to put a stop somewhere along the way. So if the price reverse, you may just take your profit, okay? This is rule number one. Never, there are a lot of rules number one, I know, but they are really also important, which is why it's always rules number one, okay? So when it reverse, it doesn't really touch your capital. So it's always look at your risk first before looking at profit. So if you look at the length from here to here, it can be a way for us to predict how strong can the price go moment breaks up. So from here to here. So this will be the length of this and this are actually the same. Okay, the length of this and this are the same. So for the price to go up, it can reach here, which is also the resistance. So when the price reach it, you may choose to take profit, or you may choose to set a stop somewhere along the way, okay, to prevent from, break even, or, from profit to loss. So if you look at this, is this a very good resistance? You see, the price really does respect all these, it does respect the previous price movement, you see. So this becomes a resistance. Moments it rebound. Now, will you do long here? I won't do long here. Why? Because you do not see a very good establishment somewhere here. You don't really see a very good establishment somewhere here. Now, let's look at the most recent one. Okay, this is the most recent one. If you look at this, let's try to see what are the price point that the buyers really wish to support. Now, this line here is actually a resistance for here, is actually a support for here. You see, moment the price comes down and the next candle, the buyers got pushed back up. Moment the price comes down, the buyers push it back up. So this from here to here, okay, this will be really the price point, if you ask me, This will be the price point that the buyers want to support. This whole area. Okay, this whole area is the price point that the buyers want to support. So your cut loss should be somewhere here, here, or here. And remember, when you want an entry, it needs to be as close to here as possible. So moment that this level doesn't hold, probably silver is going to go into another correction, or is going to go into another round of consolidation. We don't know. We never know, and I never try to predict the market. We will never be able to predict the market, but we are able to identify what are the price points that the buyers want to support in order for us to identify our entry point. Okay, now if you look at this one, this is a resistance, this is a support, and now this is a resistance. So when the price is here, if you want to enter a long position, you need to think twice, because it clearly tells you this can be a resistance, this is a support. Now you are back to a resistance because it went below and go up. You are back to a resistance. You want to do a long position here, it's very high chance that you're going to bang into the wall. The wall is just right here. The wall is just right here. So you enter here, high chance that you got bang and comes down again. So if you enter here, remember, where is your stop loss? It can be here, it can be here, it can be here. Up to you. It's depending on your personal risk appetite. If you think this is way too much for you to suffer, don't do it. You can just do it here. If you go stop up, no problem. Stop out, remember, it got pushed back out. You may always choose to re-enter. You can always choose to re-enter. Okay, this is just the way trading is. It's just all about managing risk. Identify what are the price points the buyers are interested. Identify what are the price points the sellers are interested before you enter. Now, if you look at this one, it went up. So in order for you to do long, do you think this is a good price point for you to do long? Can you identify where is the buyer's interest right now? If the answer is no, then probably this is not the best price for you to do long. What about short? You might ask me. Are you able to ask back this question again? Are you able to identify whether this is the price point that the sellers want to protect? That the buyers is going to be weaker than the seller? Are you able to identify this? If yes, then go for it, short. If you can't answer this question, don't short. It's as simple as that. So if you can identify it, then probably immediately it got pushed back down. But is this really the price point that the sellers want to support? You need to see a few more candlesticks. Okay, which is why for me, trading is not about, okay, it comes down here, I long go back up. It comes here, you short it back down. Yes, there are this kind of traders. It's just that it's not my pattern. Okay, so just let me very quickly look at the daily chart. Okay, it's a bit messy here. Doesn't matter. Let me just zoom in for us to have a clearer picture. So, and just one more thing that I want to point out to traders, if you are interested. Okay, now if you look at it, this is the 20 days moving average line. Actually, this doesn't just, whatever that I share right now, it doesn't really just apply to gold and silver. It actually applies to all financial products, all international financial products, international financial markets, even for stocks. Okay, it doesn't, when the price is very far away from 20 days moving average, at some point, it will always pull it back, retrace it back to the 20 days moving average. No matter which product, if you monitor, it will always try to pull it back. So whenever you are trying to do an entry that is going to be very far away from 20 days moving average, try to set a very tight cut loss to prevent this kind of incident. Okay, when you try to do it, try to set a tight cut loss to prevent this kind of incident, or else you will suffer quite a major losses if you do not set a cut loss. Okay, and very easily you will probably cut here. Okay, very easily you will probably cut at the rock bottom and then it rebound. So as long as you see the line is very far away, try to set a tighter cut loss until it slowly goes nearer and nearer and nearer, and then you can try to be to have a bigger leverage for you to do a stop loss. Okay, but still go back to the buyer and seller, identify what are the price point. Now, if you look at silver, it is still actually moving above the 20 days moving average. Oh, sorry, this one. I think like this it will look nicer. Okay, so if you look at it, it is still actually above the 20 days moving average, which is why if you ask me, definitely the uptrend structure of silver is still very nice, very intact. Personally, I'll prefer to do long position right now. But of course, never try to predict the market. Anytime it can come down, okay, we don't know. But we have identified our sellers, but we have actually identified our sellers' interests, okay, which is this, and this. So moment these three price point doesn't hold, personally, I would likely to see, I think silver is likely to go into correction, further correction, or needs to longer time to move in the sideways, okay, if it doesn't hold. If it does, probably it's just brewing for another wave of uptrend, okay. So this is silver, personal point of view on silver. So same goes to gold, actually. So this is gold. Okay, remember, okay, now if we look at this one, you see, remember just now we talked about gold to silver ratio, right? You see, silver today went up by 1.4%. What about gold? Gold went up by 0.5% as at right now. By the way, I think I forgot to mention, the one that I'm using right now is TradingView, and the price is actually 15 minutes delayed. But nevertheless, it is a very good charting software that you can use for free for you to learn to monitor gold and silver futures and all many other financial products. Okay, price is delayed by 15 minutes unless you pay for it. Yeah. So if you look at it, gold right now today increased by 0.5%, but silver at the same time increased by 1.5%. Just another. I think I forgot to mention this as well. One of the reasons why silver has higher volatility compared to gold is because silver is actually a smaller product. It's actually cheaper compared to gold. A very good example would be, is Maybank shares more, or let's talk about growth. Okay, growth is the most how do we call it, the most hotter product right now. So for growth, does the volatility in top growth and Hata is higher, or for smaller products like Rubber Rats, Comfort, the volatility is definitely Rubber Rats and Comfort, because they are a smaller company, it's easier to manipulate. Same goes to gold and silver. Gold is a lot more expensive compared to silver, which is why the volatility is not going to be as high as silver. Silver has a higher volatility. So for those that really like or enjoy volatility, probably silver is for you. So let's look at gold. Gold is having the same pattern as is going to have the same pattern like silver. It's basically the same. You identify where are the price point that the buyers want to support. Again, you draw a line here. You can see went below, started to push up, identify a solid foundation here. Again, went below, push up, went below, push up, went below, immediately push up. So these few price points to me are buyers' interest. Moment this price point do not hold, probably gold is going to go into consolidation or further correction. I don't know, but yeah, just monitor this few price point. If it does hold, gold probably is going to go back up. You see, now the volatility gets smaller. You may try to identify the buyer and seller interest again. Okay, it's a very interesting product to monitor. Okay, now back to our slide. Okay, hang on. Okay. Just a very quick one. Okay. Now, before I move to the Q&A section, just a very quick run through on the before I move on, just a very quick run through on the contracts that is available for you guys to track with us if you want to know more about it. Okay. First, we have the micro contracts. The first one, we have the micro contract. This is a relatively very small contract. very small contracts, very good liquidity, low margin, about 900 USD, which is quite very affordable, and $1 in gold price equivalent to $10 USD. So this is a very good product for new traders that are interested in gold to participate. Okay, very affordable, very good liquidity, almost 24 hours of trading hours. But if you think $1 equivalent to USD 10 is too small, you can look into mini gold or the main big contracts where the volatility is going to be, not the volatility, but the value per tick is going to be higher. Unfortunately for silver, we do not have the micro contracts. So the smallest contract available will be the mini silver. The initial margin will be USD $5,500 and $1 in silver price equivalent to USD $2,500. Okay. So these are the contracts available for you to trade with us if you are interested. But micro gold is definitely one of the very good products to trade because, yeah, small contracts, easy to manage your risk, and very good for beginners. Okay, and for those that are interested to open an account with us, you may try to scan here. Nowadays we have online account opening. You can just scan the QR code to open an account. Okay, I'll just give you guys 1 minute to scan if you want to do it. If you want to do it, you can just scan the QR code here. Okay, yeah, hang on, the slides is not out yet. Okay, so just now someone asked me about gold to silver ratio. Someone asked me about gold to silver ratio. Well, I just leave okay, hang on. Hey, sorry. Yeah. I just leave the account opening here. If you want to know more, just scan to do it while I answer one of the questions. For gold to silver ratio, if you want to know more, you can just try to Google gold to silver ratio. Okay, just try to Google it. You will see a chart. You will definitely see there are a lot of websites that shows you this chart. So it just basically means when the ratio is at 70, it basically just means that you need 70 ounces of silver in order for you to buy 1 gold of gold. Okay, which means if you look at the historically, okay, you look at the chart that I showed you just now historically, you can see that it's very rare for gold to silver ratio actually to go above 80, which means you need 80 ounces of silver in order for you to exchange 1 ounce of silver, 1 ounce of gold. It's very rare. So when it does happen, it gives you a very good opportunity to actually invest in silver rather than gold. This is not that ratio doesn't mean that when the ratio is very high, you need to long gold or you need to long silver. Okay, no, this is not the case. It just tells you which product is actually more expensive. Is gold more expensive or is silver more expensive? As simple as that. Okay. Yeah, basically that's it. And also, yeah, is there any any other questions from you guys? Any other questions that you want to know, be it on the technical part, be it on the contracts that we offer? No? Okay. If no, just a very quick one. If you want to know more about base metal, if you want to know more about other base metal that is available, that you may trade with us, we are going to launch soon, which is under the London Metal Exchange. You may try to scan this barcode and join us on our trading opportunities in base metal for 2020. So base metal is just is quite similar to gold, where the trend are all kind of similar. Okay, and lastly, try to search us, Philip Futures Sendirian Berhad. You may find us in Facebook, on Telegrams if you want to know more about statistics, and click our YouTube, click it, and usually we will upload our webinars, our past events, all the information will be on our YouTube. And lastly, if you want to know more about what our company do, what our company offer, what can you trade with us, you can try to contact us over here, or just go to our website www.philipfutures.com.my. We have a live chat there. You can just click and talk to us. Someone will definitely be answering your questions. Okay. Yeah. If there is no more questions, thank you for joining us tonight. Yeah, thank you for joining us tonight. And you can let us know what do you want to know more. You can just talk to us. Probably we can try to organize and talk about it in probably next 2 weeks or so. Yeah, let us know what. By the way, I see every asking me a question. What is the difference between sorry to say that we do not offer forex here. So yeah, probably I can't really help you with that because yeah, we are not allowed to offer forex here. So yes, thank you very much for joining us tonight and show us some love. And yeah, you can just still share these posts on your wall to share with your friends and on your Facebook. Let them know about it. Yeah, okay. With that, I think I will end tonight's session if there is no further question. Thank you everyone for your time joining us. Thank you.